Hello and welcome to the CNBC TV18 special. I'm Shereen, Bhan, and we've got a very special guest joining us on the program today, an old GE veteran and an old India hand as well, the global CEO of GE. John, thank you.
You don't have to emphasize the old so much, but the rest of it's okay.
Okay, the GE veteran then.
There we go.
Well, thanks very much, John, for joining us on CNBC TV18, and it's great to have you back in India. Congratulations on your new
Great to be
role.
back. Yeah.
Let me start by asking you about India then. I mean, you know, this has been a story that GE has bet on for decades now. You were here in India between 2009 and 2013. A lot has changed since then. What's the current status as far as GE's commitment to India is concerned?
Oh, no change in commitment. I'd say we've only amplified since I've been here. The business has grown. When I first got here, Shereen, we had, I think, 700 or 800 million in sales. We're close to 5 billion. So our business has grown dramatically in healthcare, in aviation, in power, our research center, our supply chain. So we're doing more of everything that we were doing when I was here. And I'd say the macro mood, I met with government officials in Delhi yesterday, a lot of customers. The macro mood around the government and everything and what's going on in the country is really strong. So we're all systems go.
So almost at 5 billion, because these targets have been elusive for GE in India.
Yeah, I might have said that to you a while ago. Now the current management team's been able to do it.
So what's the next target then? What's the target that you're
aiming for? So we were there
for?
yesterday. I said 10, guys. You know, how do we get to 10?
10 by when?
You know?
10 by when?
Well, they owe me that answer right now. So,
okay.
You know,
let me ask
not
you,
soon enough.
Let me ask you about where things stand as far as the diesel locomotive business is concerned in India. There's been a lot of conversation and a lot of back and forth. The government says that we're going forward, but we're still seeking clarity on what that means exactly.
Listen, we're moving forward. We have obviously a contract in place. We're executing under the contract. We're on or ahead of schedule, and so I'd say from our perspective...
no change?
No change, absolutely.
Because they're talking about electrification of the Indian railways over the next 5 years.
So. Over time they'll do that for sure, and I understand what they're talking about. We have an arrangement for diesel. There's going to be a place for diesel, so we're just executing under our contract.
So the current order stands as is?
Yes, correct.
Okay. Let me then talk to you about how you see things change for India, if at all, given the global restructuring that you're currently in the process of taking forward?
So we announced 12,000 workforce reduction last week, mainly in our power business and mainly really outside of India. So we've got about 300,000 employees in total. This is about a 4% reduction. It shouldn't have any really impact here in India. We're adding people really in India right now.
So you're going to add people in India and not going to be looking at optimizing in India?
No, this is really a broader restructuring of our global footprint and supply chain, so India should have essentially no impact.
And when we talk about the global restructuring and its impact, because the businesses that you continue to want to bet on, aviation, which is a significant focus for you here in India, healthcare, which in a sense was incubated here in India. So give me a sense of how you intend to leverage India as part of this global restructuring exercise.
So India, we look at it 2 or 3 different ways. One is a market, one is a supply chain source, one is a research and development center. Market, as we said before, really strong, and we continue to invest and take advantage of that. Supply chain, I was in Pune this morning. We've built a large multimodal factory there. So our supply chain and sourcing from India has doubled or tripled in the last few years. I think that will continue to grow at a very high pace. And then lastly, we had another announcement a couple of months ago. We have 9 research centers globally. We are consolidating that down to 2, one of which is going to be in Bangalore. So there's going to be more and more of our research and development and engineering work done in Bangalore. So I think you see India as like a triple threat, really, of a market, a supply chain hub, and also a research center.
So what does that then mean in terms of fresh investments for GE in India?
Listen, we've continued to invest heavily organically.
Yeah, while other people were not, while other people were complaining about policy paralysis, you were investing in India.
So we're not really looking, I'd say, at much M&A really. So it's organic investment, product development. Went through some plans today to expand the factory in Pune and what kind of volume levels we need to do that. So I think you'll see capital investment in the supply chain and manufacturing, and then product investment, research and product investment here.
What about new partnerships and new areas of opportunity? You've just inked an agreement with the Tatas today, with Tata Advanced Systems, specifically for your components for the LEAP engine. Give me a sense of the scope and scale of that partnership.
So a couple of thoughts, I guess. One is our aviation business globally is a powerhouse. We're winning campaigns all around the world. The LEAP is the state-of-the-art engine, and we've got a global supply chain. We're going to collaborate with Tata's to build some of the components for that, for the global deployment of that engine. So that really is coming to market this year and then really ramps up in 18, 19, 20 as the engines get delivered. So big business for us, highly successful. There's going to be a lot of activity here with the Tata Group.
So what kind of investments will this entail?
So those are really their investments in terms, they're going to be a supply chain partner of ours. So we're really, our investment is the technology and winning the orders around the world. Their investment's going to be in
the center will be set up by them. They invest in the
and they've
manufacturing.
got a number of activities in this area already, supporting other U.S. companies and some defense contractors. So they've got a base level investment. We're going to add to that in terms of what they need to do to fulfill our orders. And then we've got some defense activity in our aviation business, and I expect that we'll be doing, more with them here in that business as well.
So when does the Tata arrangement get off the ground, so to speak?
Well, we signed it, that's a good, basically now. I mean, these orders will come in for fulfillment in 18 and beyond. So this is not a PowerPoint, this is now.
Are you looking at any other arrangements in any of the areas that you're currently in or interested in India?
So I'd say, Shereen, a couple things. In power, we've got a number of key customers and government relationships. So we've got a good partnership with BHEL, NTPC, other people, private developers. So we've got a pretty deep ecosystem of partners in the country already. Don't see us needing to really add anything material to that. And then on the healthcare side, we continue to grow what we call our affordable care portfolio. So when you and I first met, we were developing a whole set of products for India that we could take outside of India. That's turned out to be an amazing business. So we've gone and expanded that in Africa and Southeast Asia and other parts of the world. So that we're doing largely on our own, but we could do some partnerships here in that space as well.
So what are the challenges that you see here in India? Because power, for instance, and the government has put together a big reform package for the power sector. The Uday scheme is in play now. What's the feedback that your team in India is giving you about the state of play when it comes to power in India?
So, you have the much talked about power surplus and, is that really there, et cetera. So I think we expect the power market to be strong in all stripes. Growing renewable penetration, growing maybe decentralized power generation, more need to get power out into areas of the country that don't have it. But I'd say fundamentally, India is going to continue to have strong power and electricity demand growth. So we expect that to be a strong business. You
talked about sourcing out of India and how that's grown manyfold for you over the last few years. From an export perspective and using India as an export hub, what's the sort of opportunity that you're now willing to bet on over the next few years, given the many changes that we've seen, the goods and services tax, for instance, and that was always a bugbear for foreign investors in India, the complicated sort of tax structure. Has that changed perspective on India, especially when it comes to exporting out of here?
Yeah, two or three things have changed. One is, and this came out in a poll recently, but I just say the ease of doing business here has continued to improve dramatically since I first came here, whether that's GST, regulatory environment, just the willingness of states and the government to coordinate. And so that has continues to get better, and that really drives a lot of investment in the country. So I'd give an A on the report card for that. And then we have seen just growing manufacturing and engineering capability. So when we first manufactured here, we were doing, I'd say, lower tech kinds of things. If you look at our facility today in Pune, this is like state-of-the-art electron beam welding and things. It's really on par with anything you'd see around the world. So that allows us to have much more complex products and components coming out of here. So better government environment, better skilled workforce, higher adoption of technology. It's a good picture.
It's a good picture. Let me ask you about the U.S., where we're now seeing this massive tax reform plan being taken forward by the Trump administration. What could be the impact of a significant reduction in the corporate tax rate mean for companies like yours and your dynamics in emerging markets like India?
So our actual taxes probably will go up under this tax bill. We support the tax bill, you know, unilaterally and fervently. The main thing that is interesting for us and for multinational corporations is a technical thing they call a territorial tax. We want to be taxed in the countries that we do business in. That's pretty much how every other government is set up. U.S. had always been, no matter where you're operating, you have to pay a tax in the U.S. That changes under this legislation, and so I think it's going to be healthy for multinationals. Our actual tax rate might go up, but we feel like we'll be on more even footing. So I think it just allows us to be even more competitive globally, so you'd see us doing more things around the world.
But does it also mean more globalization, or does it mean less globalization?
The tax bill by itself, I'd say, is neutral to positive on globalization. So it certainly, for our perspective, we would have, I'd say, a more competitive position around the globe than we have today. So I'd say neutral to positive on globalization.
And what about growth for the U.S. economy? Because that's surprising on the upside and looking strong. So what does that mean? What does that mean for GE?
So we're 70% outside of the United States right now. So we used to live and die on the U.S. GDP number, and we still care about that.
No longer.
Well, you know, we watch it carefully because it quite often is a reflection of the global economy. But listen, if you go around the world right now, the economic environment is very strong. Europe solid, U.S. gaining strength. I was just in Japan Monday and Tuesday this week, surprisingly strong there. Exports up, stock market up. So around the world, commodities starting to move a little bit. So this is, I think, in the last 20 years of my career, probably the strongest I've seen the global economy, you know, all at once. It really isn't a soft spot. And the big horses, India, China, Southeast Asia, Africa, we've got a big business in Africa. Those are all, you know, double-digit kind of growth. So we can't complain about the macro picture for sure.